Hi, good evening, everyone. Welcome back to the channel. So in this video, we're going to discuss TappAlpha's TSPY and TDAQ, both funds that have been on fire this year. So first, let's review the latest update that they sent out today, and we will look at a comparison of the two. So I believe we've seen no NAV erosion with these funds. So let's go over first what we've got over here. Okay, so TappAlpha delivered a January 2026 distribution of 30 cents per share for TSPY, the TappAlpha SPY growth and income ETF. So it says you're already in the S&P 500. Why not add a way to access its income potential with TSPY? So this is a distribution rate of 14% as of January 6th and 30-day SEC yield of 0.43. So with that being said, these funds, these two in particular, have done very well over the past year. So another one we're going to look at, we're going to do a comprehensive review of TSPY first, and then we may add some bonus ones as well. So we're going to go over here to Seeking Alpha. So TSPY, the TappAlpha SPY Growth and Income ETF. Let's go out to the maximum. So this one has been around since August 12th of 2024. And what do you notice? If you said that it's trading higher now than what it was trading back then, you would be correct because it's at 25.45 a share. And as you can see, it was less than that at the beginning of the chart, which is maxed out 24.51. So it's almost a whole dollar higher. So it successfully withstood the March declines in the market, and it has come back very well. It was as high as 25.90. Before then, it got to 26.32 in November of 2024, and it's up in the post market today. So obviously, dividends, it gets an A+ for dividend yield. How about dividend growth rate? This is a big one too that's seldomly talked about. 201.97% for trailing 12 months. Now let's look at dividend history. It's been pretty solid. So this, I would say, is a successful competitor to the SPYI of NEOS. So far, and it's still monthly, that hasn't gone to weekly yet, but it's staying pretty consistent around 30 cents a share. So we're getting 30 cents a share on exposure to the S&P with, in effect, no NAV erosion, which is phenomenal. If we go since inception, we've got no NAV erosion. Now, if we go back to last January, we are essentially in the same spot we were. We're actually 24 cents higher, almost a quarter higher. So in effect, folks, that is no NAV erosion, which is quite awesome. Welcome to folks that are on the chat. Let me tell Discord I'm live. So let me do this real quick here. I just saw something really funny in another Discord. Bear with me. Okay, we'll pick up a few more viewers there. Okay, so for those of you that are on, definitely smash that like button. Greatly appreciate it. So TSPY, and if you're in either of these, definitely comment away on that. So TSPY, and then we're going to look at TDAQ. So again, as you all know, I'm looking at all of the funds that are out there, the entire palette. I used to focus a lot on yield max, but I'm looking at more stable alternatives. I'm going to start talking about other yield max funds as well. Chippy definitely deserves mention in the top ones, so we'll definitely talk about that. But as far as TDAQ, this is the Innovation 100 Growth and Daily Income ETF by TappAlpha. So this one has been around since September of 2025. Peaked out in October, as everything did, 27.47, but it's only $1 off of its all-time highs, which is really encouraging. So this one, based on the NASDAQ 100, it's got a 4% dividend yield. So it's 37 cents was the last dividend payment. And there may not be a whole ton of history to judge by here. But so far, 38 cents, 37, 37.4. So pretty consistent, October, November, December. So if we take the highest payout and annualize that, so 38 cents times 12, that's 457 divided by the current share price here. That is 17% yield, actually. So that's really solid. No NAV erosion and a pretty stable, solid yield. Citizen of the Year says, how will this impact the Learning Center's legacy? Well, it's actually very tightly correlated, because if people aren't earning dividends, what's their next side hustle they're going to pursue? Probably daycares and learning centers, right? But, I can never be so sure. But thankfully, for key questions like this, I happen to be in possession of advanced financial forecasting equipment, such as the 8-ball, which helps us with not only financial questions, but life's most pressing questions as well. So this is also my secret sauce for option trades as well. So will people turn from dividends to daycare centers? It says yes, they would if given the opportunity in a perfectly efficient market, all else equal, of course. Okay, so with that being said, okay, we went over TDAQ, we went over TSPY, and I think there's some other ones here. Let's see here. Yeah, TDAQ is a big one. That's new, of course. Let's see here. So we've got TSPY and TDAQ are two of our most stable TappAlpha funds. Now, these are pretty viable competitors, I would say, to NEOS, with a really solid yield. And really, actually, I didn't mention this part either, but low expense ratios as well. So we've got really low expense ratios, actually below 1%. So the expense ratio for, and I don't always mention this, but I should, the expense ratio for TDAQ is 0.68. And the expense ratio for TSPY is 0.77. Both of those are way lower than some of the counterparts. Let's see here. We've got Eric Aviator 257. And then after him, I presume, will be 258. Are you going to be looking at TDAX and TSYX? Thank you. You read my mind, buddy. That's exactly the next two that were on the coach's list to look at. Okay, so TDAX, thank you for the comment. Of course, that happens to be the next one. So this one, TDAQ Lift ETF. How about this one? So this one, is this one of those leverage ones? Let's see here. Hold on a second. My allergies have been holding me back here. Okay, so Wolf said, I bought 5 shares of each. I already own both of the regular ETFs. Awesome. You can't go wrong just dabbling in a few shares of each, right? Although that's what I've said on certain stocks, and then I dabbled a lot more. Sometimes not always successfully. Okay, so TDAX, let me just go over the investment objective on that one real quick. So what we've got is current income while maintaining perspectives for capital appreciation, which is what we want, growth and income, right? It's the best of both worlds. Secondary objective is to provide exposure to the performance of the QQQ, the underlying asset, though potential gains are limited by the fund's options strategy. How about that? Okay, so TDAX he wants. This one is so new, I think, that didn't it just go live? Well, that's actually the one we're here to talk about, because it just went live today, right? So yeah, TDAX. So that's what we have. We don't have much history, but look at this. It's already up 27 cents, which is more than 1% tomorrow. So that's encouraging news, right? And then TSYX. Let's look at that one next. So TSYX. So we've got Lift ETFs for both TSPY and TDAQ. That's what these are. So pretty encouraging, right? Let's see here. Hold on a second. My allergies are getting me again. Okay, so let me introduce really quick the Lift ETF series. So this strategy seeks 130% of the daily performance of the non-leveraged core plus ETFs, which are TSPY and TDAQ, respectively, by applying light leverage to the existing daily covered call approach. The Lift strategy, and that's what I thought it was, leverage. So they're all kind of going to this. So the Lyft strategy as opposed to the Uber strategy, right? Haha, play on words there. Or acronyms, rather. Okay. So it's designed for investors with a higher risk tolerance who seek enhanced growth and income potential. The core components of the, how about this one, T-Square Lift strategy are light leverage, aiming for 30% greater exposure to the growth and income strategies of the underlying. Daily covered calls. How about this one? Underlying strategy involves holding a long position in the benchmark ETF, S&P or QQQ, and writing out of the money call options with 0 date to expiration. There we go. And then automated execution. TappAlpha uses proprietary fintech and automation. I'd like to talk to C. Katara about this, trying to get him back on. I was in Costa Rica and unfortunately flying back when we were scheduled to have him on, but we will have him on soon. We just got to get that rescheduled. So anyway, definitely want to talk to him about the proprietary approach here. Anyway, as far as this one, that's going to do it. Wolf says, I plan to buy more, but going slow. Need to build out my TSPY first, then build out both of the new funds to 1 or 2%. Yeah, this is definitely encouraging. Owning the underlyings, essentially, and then owning the leveraged counterparts, right? Anyway, folks, I hope you all enjoyed this. Please smash that like button. Subscribe to the channel to get future updates like this. Be the first to see what I churn out in terms of dividend content. And please smash that like button and join Discord as well. And we'll see you all in the next one. Take care. Have a good night. Bye.